Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. In this video, I'll be discussing about the penny stocks for 2022 or investing into the penny stocks and how to choose especially the multi-baggers when you are looking for a penny stocks. The idea to do this video was the viewer's choice, and if you are following me on Telegram channel Fast Profits with Brijesh, I've done a poll asking that when the markets have rallied right from 15,200 back to the 17,400 levels, 350, should you invest into the penny stock, or is it a right time to invest into the penny stock? And 44% of the voting was that they want to invest into the penny stocks, and that was the viewer's choice why I'm doing this video on investing into the penny stocks. So there's a theory which I generally follow when it comes to the penny stock or the small cap stock or the micro cap stocks before investing. I just take through what are the important things you should look into the markets when you are buying the penny stocks. So first is the market trend. Small cap or penny stocks move when the markets are into the bullish trend, and I'm not looking at a bullish trend of a day or a week. I'm looking for a bullish trend of a quarter, of 6 months, of a 1 year, of a 2 year, of a 3 year. And if you remember, I'm been consistently doing the videos on mid caps and small caps, indicating that they will outperform into the against the Nifty 50. And 2021 was exactly what small cap has done, where the index has rallied much more than the Nifty rally. And even if you look at the mid cap, also rallied much more than the Nifty into 2021. And that kind of market is very important when it comes to the penny stock or the small cap stocks. So yes, market trends play a key important role. Second is the holding of promoters, holding of DII, holding of institutions. What are the percentage of the holdings into these funds? And there are various mutual funds as well which are focusing on the small cap. And many a times when you are looking or analyzing the mutual funds with the small caps, there is a written with the star or into the bracket that it is very high risk fund. And that's the reason, because the penny stocks are generally the high risk, or the small caps are generally the high risk instrument into the equities place. The third is the dream business model, or it is a trustworthy of business plan and management, which is very important as well, because the management play a key important role when it comes to the any company. And into the small cap cap or the penny stock company, there could be a cause office which could be in a small I would say the cabin where they are sharing the business and their company is listed. So you need to check such kind of stuff. Is this the just a cozy office and a dream business to sell it, or is the business plan and management trustworthy to invest into the small cap or the penny stock? And what is the moat into the business, which is very important when it comes to the any company, not only the penny stock, but when it comes to the penny stock, they are very small compared to the giants of the industry. So here it is very important how they will beat the larger giants, because if in case they don't have that I would say the extra effects of the business model, they can't compete into the giants. So they need very important factor which will keep them apart from the giants. So these are kind of some of the fundamental factors which you need to know before investing into the small caps. When to buy the penny stock, which is very important, as I highlighted, market trends play a key important role, and that should be medium to long term. I'm not looking at the short term for a week, for a couple of weeks, for a month, but yes, medium to short long term, which means that it can vary from 6 months, 2 quarters to probably a decade, which is a key important role, because markets if are not going higher, the stocks will not go higher. And when the markets fall, we all know that when the market fall, the correction into the small cap and mid caps are much more than the large caps. The similar, if you look at the last couple of months, especially in 2021, we corrected right from 18,600 to 15,200, which was nearly 17-18%. But at the same time, if you look at the mid cap and small cap, they were down by around 30 to 35%. It is the index I'm talking about. Looking at the stocks, they may go much lower compared to the large cap. So you need to keep a market trend very important. Uh, I believe in a technical theory which is accumulation and reaccumulation. I'll discuss in this video as well. This video may be slightly longer, but I would request watch till end because this theory will be very important, and it is the simplest theory which I generally follow, and you can follow on any free websites as well. Reaccumulation phase is the best phase to invest into this kind of stocks, and the volumes indicate on the consistent basis on weekly scale a huge accumulation has happened. And I use this factor called the U theory of volumes. I'll explain what kind of theory it is all about. But it is very important for me when such kind of theory is being seen onto the chart before buying onto the stock. I'll share some examples as well. So this is a Wyckoff Theory model which I generally follow onto the buying the penny stocks. There is an accumulation phase where the small buying happens, and this generally takes months and years to happen into the accumulation phase. And the smart investors or institutions are buying small, slow and steady pace, which is not known to the retail investors. Then there is a markup leg ahead of reaccumulation, and the reaccumulation phase you see on your screen, it is very important for a retail investors to keep a watch on, and that's the time and that's the best phase I would say a retailer should invest into the stock. If you are able to analyze the accumulation phase, that's the best one. But in case you don't see accumulation phase, the reaccumulation phase is still a best phase where stocks can go 10x, 20x, 30x, 40x, 100x also. So reaccumulation is one of the best phases one should look at. And into reaccumulation phases, it also gives a confirmation that the stock has formed the basing structure, the bottoming structure. But yes, into the reaccumulation phase, you need patience as well. It can go into the months and go into the years as well, the reaccumulation phase. So you need to have that kind of patience when you are investing into the reaccumulation phase. Then come up the markups, and follow that markup, there is a distribution phase, which is I'm not much focusing on the distribution phase as of now, but there are some key important aspects you need to keep in watch on distribution phase, where stocks go 50% down, 70% down, 180% down as well. So you need to keep that so there are some of the basics stuff which I have highlighted. There is a lots of media coverage happening onto that kind of stock, and remember that stock may elevate from small cap to mid cap to large cap, and I'll show some example as well. When it moves into the large cap, the shareholding patterns also changes. So you need to keep a watch on that. But if that stock continue to remain into the small cap basket, the media coverage, it would be the short term media coverage, because the stock is into the top gainers, the volume breakout, the volume buzzer, all sort of momentum of when the stock is trending. So that could be the media coverage. You may receive n number of WhatsApp forwards on the same stock, which is also a sign of cautious, I would say, when it comes to the small caps. And the big two changes you should keep a watch on is the fundamentals are probably not the same which was into accumulation, reaccumulation, and the things are turning worse or bad for the company. And the fourth, which is the most important when it comes to the technical theory, is the volumes are decreasing at this last leg of rally. When the volumes start decreasing into the last leg of rally, which means that the strength, the bulls are tiring out, we may see some selling pressure coming into the distribution phase. So you should keep a watch into that. But this video, I'll be more focusing on the accumulation and reaccumulation phase. So let's start with some of the examples over here. So look at the Bajaj Finance right in 97, 98, 99. Okay, when the stock was trending into 1 rupee, 2 rupee or lower than that. And that, look at the reaccumulation phase, the left, the bottom black rectangle, if you see, the accumulation has happened, and look at the volumes. If you look at the volumes, I have drawn the orange line which is into the U form. That's the U factor which I was talking about. Look at the volumes. There was an uptick into the volume, then volume dried down, and we have seen again an uptick into the volumes. So these volumes play a key important role when it comes to the accumulation phase. And if you look at the accumulation happen, you may not know at that kind of time Bajaj Finance, maybe though it was a Bajaj company, a reputed one, but you never know that that company will make what kind of upside levels. So I'm just ignoring that level that accumulation happened. But look at the second right hand side of where I've drawn the black rectangle again, and look at the volumes onto the lower panel. Again a U structure forming. The volumes were higher, then volumes lowered, and again volumes picked up. So with the reaccumulation, that's the time an investor, a smart investor or retail investor should look at such kind of stocks when the reaccumulation happened, and look at the momentum. Look at the next chart over here, which again after 2008, and again 2008 was known that it was a recession fall. N number of things, global recession happened, and look at the V-shaped recovery. And post that, during the V-shaped recovery, look at the volumes, the U theory factor of volumes, which I generally follow at the higher level. Again, as I said, the patience would be tested into the reaccumulation phase as well. And reaccumulation happened back after the fall. And look at the momentum. And it was trending around 60-70 rupees, and rest is the history. We are trending at around 7,000 rupees onto the Bajaj Finance, which is 70 to 7,000 rupees, which is 100x. So such kind of reaccumulation needs to be thoroughly been seen into the, and it's simple. Go to any website. I just use trading where trading view. You can go to investing, you can go to our Equitymaster website, type any ticker you want to check, add volumes into the charts, and you can go to the weekly and look at these volumes. If you see a consistent U-shaped recovery, a U-shaped structure into the volumes phase, that's a time you should keep a stock onto the alert. Look at some more examples as well. Nilkamal, look at the 2009. Again, I would say 2009 was a V-shaped recovery accumulation phase for Nilkamal, because that was the first time where we have seen such kind of huge volumes coming into the stocks. In case you might have missed that rally, back in 2014, 15, 16, look at the volumes it has picked. Again, a U factor. Again, look at the prices going higher and higher with a huge volume. So reaccumulation has happened in the same pace when stock was trading at around 450, 460, 500, 550 levels, 600 levels, and look at the volumes. And now, what kind of levels we are trading into the Nilkamal. So it has gone multi-x into the stock as well. So you need to keep a watch on such kind of. Dhanuka Agritech is the next example. Look at the accumulation phase which happened for years between July 2011 to probably 2013, last quarter of 2012, I would say. The accumulation happened, the slow and steady volume increased. Look at the reaccumulation happened right at around 135, 130, 140, 150 levels. And look at the U factor volume theory. Again, the reaccumulation happened, the stock is now trading somewhere around I guess 600, 700 levels. Again, it has gone x from the level of reaccumulation. So you could keep a watch on such kind of stocks. One chart I want to highlight where you should avoid such kind of stocks. Again, you may see such kind of examples, n number of examples into the penny stock and small cap stocks. Is the stock going circuit to circuit? What this means, there is a day limit of 5% into a stock which hits at open or at a close, or a positive side or a negative side. So I would suggest avoid such kind of. And if you look at the chart over here, look at the volumes onto the downside. There was 2-3 weeks of volume, then again no volume, a dried up. This is not a U factor because it was a sudden increase in for 2-3 weeks, and again there is no action coming in. Though there is no follow-up of volumes coming in. So there is the U factor lacks into this stock. Though the stock has gone from I could say around 40-50 paisa to 8-9 rupees, but I would still avoid such kind of stock because I haven't seen much kind of volumes, and then it went down. It's I guess trending somewhere around 4.5-5 rupees. But I would suggest avoid such kind of stocks where you don't find U vector volume, because the reason to find the U structure or U factor volume theory is because you get a follow-up volume theory, follow-up buying happening into the stocks, which is not the case in this current example, and that's the reason I've highlighted this stock, because there was a lack of follow-up volume coming into the stocks. So that's the U factor theory I follow. In case you have any doubt on this theory, you want to add any oscillators, you can message me into the comment. I'll try to reply as much as I can. And definitely investing into the penny stocks, and I still believe small cap and mid caps are in a comfortable position where you should look for an investing avenue. And if you remember, if you are watching my daily videos, I have highlighted in today's video as well, the mid cap index is coming back very, very strongly. So yes, we are having much bullish trending months and quarters to come into the markets, and stay invested and have a profitable year. Signing off, Brijesh Bhatia.